Okay. So if the price action permits, we're also going to start to do some, like, adding positions to winning trades. I think that's something really important as well that people have been requesting privately here. So we're gonna try to do as well. Only trade from 8:30 a.m. is okay. It's okay, but you can't be specific about it, right? I mean, if you don't find a trade between 8:30 and 9:30, I mean, you can't be really specific about it. So there's no specific time to trade. Trading times really depend on what time do you have in your day-to-day life that you can dedicate to trading. All right, let's get some random dates over here. I kind of want to do 2021 because that's the most recent price action, but this is what we're going to do. We're going to start from September 2020 because whenever you do simulations, you have to keep it more recent, because I think every 8 to 12 months, the price that, like the market dynamics and price action, it changes a little bit based on what's happening at that point. So we're going to go with September 2021. We're going to only need Sundays because that's when the market opens. All right. We're going to go with 15 dates at this time. Let's get these dates over here. Oh, 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 there are no 31 days in September. Okay, so we got a plethora of dates over here. We got May, April, March, January, we got October, we got September. Let's do 9th May. 9th May, 16th May, 17th January, 9th May going once, going twice. All right, perfect, 9th May. Okay, so we're going to download the data here first and update it. Right, pound, yen. Oh, we got all the pairs over here. They added some new pairs here as well. They added US 30, FTSE, it was still there before, gold, oil. Oil hit $80 a barrel, crazy. It went to -10 as well during the COVID. All right. Perfect. Download the economic calendar here as well. Some people may have the newer version of the simulator. I just couldn't be bothered with getting the newer version, so I still got the old version over here. Okay, so pound yen, we're gonna move towards 2021, May 2021, May 9th. Pound, we're gonna start with 12,000. Oh, actually, let's start with 6,000. Time and charts is going to be New York close. Leverage is going to be, let's say, let's do like 200, 1 to 200, right? Lower leverage. Initial history we want to see is like 200 days. And awesome. Perfect. Oh, one thing. Just got to make sure we're being recorded. Okay, it's being recorded. Perfect. Okay. There we go. We're going to load up some new charts over here. Let's start off with the daily. We're going to move all the way up towards 4 hour, 1 hour, 30 minute, 15 minute, 30 minute, 15 minute. 5 minute, I don't think so. No, I don't think we need 5 minute here. All right, awesome. We got the charts loaded up. We have the daily time frame. We have 4 hour, 4 hours with a gap. We have 1 hour, 30 minute, and 15 minutes. So first of all, what I want to do is let's just talk about gaps here for a little bit, right? Because I know some people are new and we still just want to refresh some ideas over here. So if we're looking at the 1 hour time frame, we can notice how where the 1 hour candle closed. We closed at around 151.848, and on Sunday when market opened, so let's play this here for a little bit, a few seconds. On Sunday when the market opened, there was a gap, right? It opened with almost like a 17 pip gap, right? So the reason why gaps happen is because let's say the market is open all the time, 24/7, right? Never takes a rest. Market is open all the time. But the brokers are something that show you where the market is. So over the weekend when the market is closed, this is where the broker closed. And when the broker opened, they saw that, okay, over the weekend price moved this much. So that's the best price you get. This is why we have gaps. This is why we have slippages, because the price moves so fast at times that the brokers, they don't get the correct price sometimes. So this is why we have these gaps happen. But now the question will be, okay, do gaps really get filled all the time? No, they don't. You know, they don't always get filled. They do respect zones. For example, we can see that there is a zone right over here, right? So there's a very high probability that this gap will respect the zone, because over the weekend, as price moved up, it encountered the zone and kind of like rejected it or whatever. So we're going to take a look at that over here. Yeah, see, we're respecting that zone over there. So price and gaps, they do respect zones. I mean, if we would have, let's say, gapped above 152, then you would have said that over the weekend price gapped above this zone, so we may respect this area of support and then potentially, continue moving bullish to wherever it's going to go. So, so we're going to move on over here. Our trading plan is going to be trading the pre-New York, moving from pre-New York till NYSE, right? And if you're looking at the simulator, you can see price started at 000. We're going to start with the 1 hour time frame, and we're going to go towards, oh wow, damn, Asian session came in and price moved up. Okay. All right. So we're going to move towards pre-New York. This is London Open. Something that happened this week. Price just continued pushing. London Open, this is 4 a.m., 5 a.m., and 6 a.m. Eastern, right? So this is an hour before pre-New York that we're going to look at here right now. Let's start with the daily time frame. So looking at the daily, let's fix up some chart properties on the 4-hour time frame here as well. So this is also going to be, I guess, some sort of a good revision on what to do when you come to the charts and price is just moving bullish. Some people like to take sells if we break support. Some people like to take, go with the overall trend. So we're going to see what we can find here. All right, let's take a look on the daily. Daily is pushing bullish, obviously, right? I think the previous daily candle closed bullish. We broke above the high. We're pushed up almost like 111 pips. We had clean candles to the left hand side. Now it's coming up to a rejection area right here. Now we don't know whether there's enough volume for price to continue pushing through this area, or price is going to reject this area to potentially retrace or come down here a little bit. That's something we don't know at this point. So what we got to do is we got to take a look at the 4-hour time frame, see what's happening. Now looking at the 4-hour, we see the same situation, right? So this is a high time frame to lower time frame analysis and breakdown. So when we look at the 4-hour time frame, we can clearly see that we're approaching a resistance, and this resistance was created back on, if you look at the time at the bottom, the first week of April. We rejected this area, consolidated, and we just came straight down. So what's the probability we're going to continue down from here as well? We don't know yet, right? Because that's why we got to look at the small time frames here. All right. Let's take a look on the 1-hour time frame. Now, looking at the 1-hour time frame, we can clearly see that we're kind of like, consolidating right here, right? Since we're consolidating, we need to see where we're creating a zone. So one zone is right over here. We're creating a resistance, and then we're rejecting some sort of a support down at 151, 126, right? So if we're rejecting some sort of a support down at 153, 100, I think this is also going to be solid support based on the 30-minute time frame as well. So let's take a look at that. Actually, we're going to copy this over to the 30-minute, and we're going to take a look at the 30-minute here. Okay, perfect. Yeah, right now we're in a zone at this point. So if we measure this range, this is a 21 pip range. So if we're looking at 21 pip range, it's very clear to see that if we do break below the support, then there's a very high probability we can continue down to possibly this support around 30 pips away. This is actually very clean price action. And if we break above this resistance, which is 153.320, Then we got to take a look to the left hand side to see where can we move on to. So we're going to take a look at that here right now. Bring up charts. All right, perfect. Okay, so our next zone is probably around 15 pips away, but we also got to look past this area as well. So we're going to put a line right here. We're going to look past this area at the most recent price action, which we don't see. Interesting. So we picked 200 days to the left hand side, and I guess 200 days is not enough. Yeah, we can see all that area there. So this is something going to be like Bitcoin, where you can't look to the left hand side and you just gotta gauge where price is going to go. So that's what we're going to do, right? So far we're only going to wait for price to either break above 153, 340, 320, or we're going to wait for price to break below 153, let's say 100, so we can continue on moving down. Perfect. So a new hour has started at this point. Let's clone this over. I think it's already cloned over to the 15 minute. Yeah, 15 minutes also consolidating over here. Awesome. I guess we're just gonna wait to see how price moves or how price breaks up. I guess on the 30-minute time frame, yeah, it would make much more sense over here. We're just consolidating. All we need is for price to break above these wicks or wherever we get a candle close and anticipate volume to continue push up or continue to push down. Now, since we can't take a look to the left hand side, it's much better to kind of like have ideas of where price can go, like a visual ideas. And what I mean by that is, like, if you look to the left hand side, we have our first target as 153, let's say 500. I guess that could be a pretty nice target, almost like 17 pips away. Next could be 153, 600, like whole numbers, 600, 700, 800 probably, so we'll see if we can continue up, and if we do continue up, if we can really add positions as we go up or not. So let's take a look on the 4 hour. 4 hour is also still bullish. We'll need to break above the 4 hour candles here. You can look to the left hand side. 1 hour time frame. Yeah. One hour is also pretty up at this point. We're about to break above this high. So now the question is, since we are in an uptrend, if we do break above this wick, can we add an impulse entry for price to continue up? That's the question. The 30-minute candle is also about to close over here. Oh, we're breaking above. I guess, should we wait? Or should we? Yeah, I think we should wait for the 30-minute candle to close at least. Because we got almost like 8 minutes left for the 30-minute candle to close. And if the next one can break above this high, then it's going to be go time. All right, speed it up here a little bit. Let's forward this candle to the 30-minute candle close. All right, so 30-minute candle closed bullish. Now, this is where impulse entries are going to work really, really well. So if you look at this candle now, this candle closed bullish. Oh, let me fix the color over here. We have a candle that's closing bullish right here. Now, if the next candle or any candle after that breaks above this high, because this is the most recent candle that pushed beyond this area, then that's going to be a really good opportunity for an impulse entry for price to continue pushing bullish, right? Or if we can break below this level, then we can continue on moving down. So that's something I guess we can wait for here. Let me bring this Zoom session right here. All right. Let's see. Now we need a confirmation. Our confirmation is going to be a 30-minute candle closing bullish. Or if we can break above the high, so we're going to speed it up here a little bit. We're not going to skip the candle in case we miss the impulse entry. So we're going to leave it as it is. All right, we got the candle about to close. We got the 1 hour candle also about to close. very soon. We're coming down to a close. 3, 2, 1. Awesome, perfect. 30-minute candle closed bearish. Let's take a look on the 1 hour time frame. 1 hour candle has also closed bullish. So I guess it makes sense. If the next candle breaks above the high, then there's a higher probability we can continue up. The daily is also pushing bullish. Now, do you look at 15-minute? Yeah, just focus on the 30-minute for confirmations. If we look at the 15-minute for confirmations, you can see what kind of a mess the 15-minute is in, right? And 15-minute will always give you weak confirmations, very, very weak confirmations. So you can see it's very, I mean, it's not nice to look at. So and then if it's not nice to look at, then we're going to move up one time frame. So that's where I'm going to only focus on the 30-minute or focusing on the 1 hour time frame. Now, obviously, if the daily candle is pushing up, we do understand we're coming up to a resistance, but unless we do not see any selling confirmations, it's not a sell. I know some guys take blind sells at strong resistances, but as we saw last week, I think this is going to be a good example of what we saw last week if it does continue to push up, where pound yen just continued pushing up. So aggressive. Damn. All right, the 30-minute candle is moving down. Okay. Oh, looks like it's starting to move back up here again. Let's wait on this. Okay, so slowly we're about to break. Okay, there we go. So we're breaking above the previous bearish candle. Now, this is something really interesting. If you look on the 1 hour time frame, the 1 hour candle hasn't really broken the high right here. The 30-minute candle is breaking above this high. We're about to break above the high of the candle here we talked about. Let's do this here. Yeah, slowly. Yeah, see, we are breaking above this high. So this is going to be a very good opportunity to take an impulse entry here. Because now if we ask ourselves that, okay, what's the probability price can move up versus what's the probability we can move down? Now, obviously, there's a high probability we can move up, but also there's some sort of a risk that, okay, well, we're coming up to a rejection area. And since we're coming up to a rejection area, we may reject this area as well. Now, that may reject the area, that little may feeling, that's hesitation right there, right? That's a little bit of hesitation where you as a trader, you're identifying a move correctly. You're looking at the 4 hour, you're like, okay, we may fill the wick and the trend is bullish, we may move up. Daily candle may continue moving. 1 hour candle, as it's breaking the high, it may continue moving up, right? But that little hesitation is something that's going to stop you from executing the trade that, okay, it may reject. It's true, but also remember what we talked about, right? This is the most recent bullish candle that moved up. And if we're breaking above this high, then there's a higher probability that the bullish trend, it may continue. Also, one important thing is that you also need to explain to yourself why it would happen, right? If we look at this bullish candle, it broke the low of the previous one, almost two 30-minute candles, right? So if we broke the lows right over here, then that means that maybe we grabbed extra liquidity to continue pushing through the zone, right? This is how you got to explain stuff to yourself. You got to really break it down and really explain it to yourself that, okay, why did this wick happen? Why did we break the low? What does this represent? You know, so I've been looking at charts, and to me, it represents that maybe we grabbed extra liquidity to continue up. So now when we talk about stop losses, I think a pretty good stop is going to be like almost, like a 15 pips below this wick over here, or even within this range, because if we're breaking up, then I guess there's no need for price to continue back in this range. So we're going to use about, I think we use about like 1.5%. What percentage probability will you assign at this point in time? I don't know. There's no specific probability number, but all I know is the probability is going to be higher. There's going to be, it's very hard to justify what the probability number is going to be. So we're probably going to start to look at maybe like around 12, 15 pips at this point. Um, let's bring up the trade. I'm going to take profit. So yeah. Why did you place the support at 152.80? What? 152.80? Right here? Yeah, because that's where this move started. That's why. Would you take lower risk with impulse entries? Yes. That's why it's 1.5 plus. We saw how pound yen moved this past week. So using that as confirmation that okay, the bull run should basically continue at this point. It might consolidate. Yeah, see, that's also some sort of a hesitation. Look at what happened this past week. That's it. Just look what happened this past week. There was no stopping pound yen. We're moving in. Look at the time here as well. This is a high volume time, pre-New York session. This is high volume time, so high volume time means there should be some sort of volume here in the market. All right. I guess we moved within two 15-minute candles. So at this point, maybe we're going to secure around 90%. Let's put stops at break even and then let the rest run. Now, since we're moving up at this point, there's also some sort of a probability where price can retrace, create support, and then move up. So that's the opportunity we're going to wait for to see if we can add a position to this winning trade. If you look on the daily, we've moved up 4-hour time frame. We broke above the high. Here we moved up. We consolidated. Something Zalak talked about. We moved up. We consolidated. Right now we've broken above this area. So we've done that sort of consolidation already. Yeah. So pre-New York, we moved up over here. This candle is about to close. The 30-minute candle is about to close. Um, yeah, we're gonna see how the candle is gonna close on the 30-minute time frame. Pretty amazing how price moved this past week on pound yen. Just kept moving. There was no stopping pound yen. Not at all. Now, where we want to add a position is probably going to be some sort of a consolidation on the 15-minute time frame, or even if we break, no, we need some sort of a retracement. Can't add a position as prices breaking the highs, because here's the thing, right? We took an entry as this candle broke above these highs because we broke above the highs of consolidation, right? That's where impulse entry worked pretty well. But as we're breaking above the high, as price has moved up, so this is going to be a very bad price to enter a trade because now we're breaking the high after having this big move. So this is an idea where you might be like, trying to get into a really bad price for price to continue up. So we want some sort of a consolidation, and then if we start breaking above the highs, I guess that's going to make much more sense. Actually pretty happy with this move over here. Let's take a look on the 15-minute. Yeah, we're consolidating here on the 15-minute now. You can see the candle body is getting smaller, which means there's some sort of a consolidation about to happen. We have big body, small body, and then this candle is forming here, so we gotta wait. We also have NY open coming up, and we'll see how that opens up. NY open. All right, let's move forward with this candle. Okay, so 15-minute candle is consolidating, 30-minute candle closed like a small doji candle. Let's take a look at news. We have no news over here. Okay. See, now now we've broken this low over here. We're having some sort of a retracement. So I think a better trade idea where we can add a position would be maybe above this resistance here. Now, when we talk about, let's say, when should we be taking sells, since this is a higher time frame push here, we would want price to create some sort of a support. If we can create a support on a 30-minute time frame, and if we can break that support, then that's going to be a pretty good idea to take sells. But since we're only breaking the lows on the 30-minute, and the weaker time frame confirmation on the 15-minute, breaking the lows only will not justify sells at this point. Oh, one moment here. Hey, Sanan, what's up? Okay, come. All right. Would you close the runner with the small body candles? No, the runner is set to break even, and it's only like a very, very small position here as well. So, I mean, either it gets stopped out or we can break above this area to see if we can add a position to see if we can continue pushing up here or not. Either we break above the high of the previous 15-minute candle or we can get a close above that area. Would the high time frame breaking lows justify taking sells? No. Just as we mentioned, breaking the lows would not justify a sell. For me, it would justify if we can create support and then break that support. Now, since we're going to be breaking the highs on the 30-minute and the 15-minute here now makes sense. Right here, the 15-minute was ugly. The price action made no sense at all. But if we look at the candle pattern right here in the 15-minute time frame, you can see how this is almost the same as what we had on the 30-minute right over here. So we'll see, it may hit, then jump to 15-minute. Okay, I will see. We just gotta break up of this area. Oh yeah, see, nothing. So now if we create a support, then I guess price is going to continue pushing bearish because we're rejecting this area here. Let's see. Candles forming. Oh, we're about to break above here. I guess. Oh, 30-minute is breaking above this area here. Candle's also about to close. 1 hour candle is breaking above the high. 15-minute consolidated and it's breaking above the high. I guess we can add a position maybe like 0.5. 0.5 right here, since this is based off of the 15-minute. 0.5. Since we're breaking now on the 30-minute, we're breaking above the highs after a little bit of a doji. We're breaking above the highs on the 1 hour time frame. But on the 15-minute, we're breaking above a consolidation and then we're continuing up. Also, we're coming up into a high volume session here, NY open. Oh, there we go, nice. The candle's also about to close over here now. 15-minute candle's about to close in about 3 minutes. Impulse entries are very, very risky because, sometimes when you take them in the, okay, so we've closed bullish. Candle, this one should retrace and then continue up. So I guess if we break above the high in this high volume time, I wish we could see what was on the left. I guess right here we can probably add a position as we break above the high. If we break above the high, that'd give a good idea to add a position. Candle's still open. We're still kind of like struggling here. 15-minute candle's about to close. Keeping an eye on the time. Slowly but surely, we are trying to pump up. 15-minute candle's about to close. Oh yeah, there we go. Look at this 15-minute candle. Looks like it's going to continue pushing up, but necessarily do not want to add this here because we're still moving in Monday. All right, that position is up almost 10 pips at this point. 13. So we're going to close this one right here. Close. I guess we're only going to move the stops right here below the 30-minute candle, also the 15-minute support. Yeah, right here. So we're just going to move the stops below this area. I guess also let's move them below. I guess we can't move them now. Okay, perfect. Awesome. This was one trade for this simulation. Traded the trend, impulse entries, both positions. Added a position right here as we broke above. Oh, I guess we moved further up over here. So this would have been almost like a 20 pip move. So our first one is running at around 44, 45 pips. Okay, let's move on to the next session. We're going to leave this running till Asian or like, till it continues down to stop us out or whatever. But we can't really see what's happening to the left hand side. I'm just wondering, as this is my first time in my experience, I've seen such a massive bullish move on GJ for 5 to 7 consecutive days. Do you think it moved because of some fundamental news that we don't know about? Yes, that's correct. Some fundamental news that we don't know about. Sometimes there's a lot of volume and it happens. Also, you got to look at it this way, that there was no volume in August. September was also mild, so it was expected some sort of volume to be in October. All right. Let's move on to the next one here. Oh, wow. Tapped stop loss and it continued up. Okay, so let's move on to the next New York session. This is London Open. Looks like Monday was a high volume day, so now I guess we're consolidating over here. So this is 4, 5, 6. 6 a.m. Eastern. I'm back again. Let's take a look on the daily. The daily is obviously bullish. We've broken above this resistance on the daily time frame. Let's take a look on the 4-hour time frame. 4-hour, let's remove all these analysis here now, all these zones. So 4-hour is creating a consolidation area at this point. We can see how 4-hour broke above this consolidation when market open. We moved about 180 pips. Now we're consolidating. We're potentially creating a support here as well. Let's take a look on the 1-hour time frame. Now looking at the 1-hour, we have a big liquidity grab at this point. And we're probably going to mark this off here as well. We have a big liquidity grab. We have a resistance forming up over here. So this seems like a pretty big range, almost like a 41 pip range, right? So this is another example where we have a big range and sort of like a wick over here, which may or may not get filled. Let's take a look at the news. We have no news, FOMC later on, but we have Bailey speaking later on here as well. So, all right, let's take a look on the 30-minute time frame. Now, 30-minute time frame tells us a different story. 30-minute time frame tells us that we have a resistance at 153, 880, 890. At the same time, we have a support right here. And this is an entire consolidation area at this point, right? Looking to the left-hand side, obviously, there's no price that we currently know of to the left-hand side. So yeah, I guess this is it. So if we measure this range, this is like almost like a 22 pip range. If we count on the next 30-minute candle to break the low of the previous one, right here, this is going to be 13 pips. It's not worth it here at all. So I guess a better idea would be to wait for candle to maybe break and close below 153, 600, 640, so that we can continue pushing down, probably down back to, yeah, I guess it's going to be very tricky here. We may have to look at zones based off of the 4-hour time frame. Yeah, I guess right here. Break out of this area on the 4-hour, or even maybe if we break below the low on the 1-hour, we can fill this wick over here, 25 pip range. But this is only going to be based on the higher time frame analysis, like the 1-hour time frame. All right, what's this? Is it a good idea to look for a wick fill and consolidation to volume hour? Yeah, that's something that I was trying to say. Like, maybe in the volume time, we may get that wick fill here. We may. That's a big maybe, right? So, yeah, I guess we'll have to wait and see what happens here. Oh, we are breaking below that low over here now. We're breaking below this low. Could this be? But it's also breaking below the low in the first 1 minute. If we're breaking below the low in the first 1 minute, it's kind of like very tricky at that point. Yeah, I don't want to get into a trade first thing in the morning over here, because if you're imagining this is the first thing in the morning, it could get very, very tricky. Can't you get in and out of the market in the ranges in the lower time frames? Yes, we can, but that's not the way how I trade. And also it's against the overall trend. That's correct here as well. You got to look for, don't try to look for risky analysis. You know, sometimes I talk to guys and they're like, yeah, I sometimes I trade risky analysis, sometimes I trade non-risky analysis. I say just stick to non-risky analysis. It's going to take you a long time to get those, but the confidence that you're going to build over time is going to be, which will really break some barriers when it comes towards, you know, increasing risk, increasing lot size, and that's in turn is gonna like can help you make more money in the end. But if you keep taking risky analysis will lead to bad confidence, you know, more losses, and overall your progression is going to be very, very slow. So yeah, let's just wait for this 30-minute candle to close. All right, let's take a look at this. 30-minute candle has closed. We're closing just at the support. Um, if we do break below the low, this wick is like almost 10, 11 pips away. I think it's going to be kind of risky, not a lot risky, but I think it's going to be. Let's take a look on the 15-minute time frame. Yeah, we'll need to break below this area to really continue down. So I guess on the 30-minute, if we do wake up and break the low right here, 153, 650, we could. Now this is going to be an example of a risky analysis. You know, it's going to be an example of risky analysis. So yeah, we'll see. We shall see. We're waking up. We're breaking below the low at this point right here. This is going to be an indication where price could potentially continue bearish now since we're breaking below the low. We have this wick to fill. We have a wick to fill on the 1 hour time frame. Looking at the 15-minute, we're also breaking below that area. Previous candle had no wick at the bottom, but that's a 15-minute, right? The 30-minute is still pretty good. I guess could be a pretty good entry right here with stops above the current candle. You know, anticipate this wick fill around 522 if it does happen. So yeah, let's take the sell. So since this is a risky analysis, we're going to use lower risk at this point. Stops above the current candle. We're looking at TP down to fill the wick. But also mind, we're only looking at this candle possibly to continue pushing down to fill that wick. If you fill that wick, I think it's going to be pretty good. If you don't fill that wick, then oh well. I guess we're getting that oh well over here. Price is just kind of like, you know, wicking up into the zone because it looks like this zone is a very, very tough zone because this candle wicked down and then came right back up. All right, perfect. Look at that. We're about 4 pips in profit, 3 pips in profit. This candle's also about to close. We got to wait for this candle to close. The only problem here is that even though we want price to go down, but the only problem is that in the past, we had this candle that looked just like this at one point, you know, and then it wicked right back up into the range. This is the only issue. We don't want this current candle to wick right back into the range. And for that reason, if price comes back to the entry point, I'm going to close the entire position because we got to manage risk. See right here, it's coming back down to the entry point. So I'm going to close everything right here because there's a possibility that it may wick right back into the range. So that's why, oh wow, yeah, that's something we don't want to happen because there was a rejection here before as well. So you don't have to like, you know, marry your analysis or it has to go down or it has to go up. You just have to look at what happened in the past. Okay, so we closed below that area. Yeah, now if someone tries to take sells over here, this is going to be very, very risky sells. This will be very risky sells because now we're coming into a rejection area, then we're coming into another rejection area right here. So yeah, it's going to be very, very risky over here to take sells because these were our good sells if price will really continue moving down. These ones right here. So it's okay not to trade one day. We're still up about 1.7%, which is pretty good. It's really, really good. All right, let's take a look on the 1 hour time frame. Yeah, 1 hour candle is just rejecting that area there. Straight rejection. Up 15 pips. So this type of move, there's two choice: really lower risk or just sit back. Yes, that's correct. Either lower risk or just sit back. So let's move on to the next candle, which see how it closed. So we closed back up in the range, right? Now, the question is, if we closed back up in this range, what will make price go down? You know, I think what's really going to make price go down is if we can have a candle close below this area again. I mean, and if you look at it from a fake out perspective, I think we'll need the next candle to break above this area to probably continue back up, which is going to be 15 pip range. Yes, correct. So this is a ideal example of a fake out where we had support, support, support. Candle broke below support. We broke below the low. Couldn't maintain that momentum, so we closed back up in the range. If the next candle breaks above the high of the previous candle, so then that would mean there's a high probability for price to continue back up in the range. But if we can get a candle closing below the support again, then I think maybe we could say that, okay, this move up was a liquidity grab for price to continue pushing down. So we'll see. We're about to break. Oh, we didn't break the high. We did not break the high. We're continuing to break below the low over here now. All right, it's pretty solid. 30-minute candle. It's trying to break below. Let's take a look on the 15-minute as it's about to close. We're also coming into NY open. Now, confirmations plus, now see what's happening here. Price came down, we broke below support, moved up and created a resistance. Right now, this is where you have to make a judgment call, you know, and a judgment call is that since we're coming up into NY open, which is a high volume time, and we've just been consolidating. We broke below this area, and if this 30-minute candle can close below the support, what's the probability that the NY open will continue pushing price down? That's something you have to identify here. And I think if we do close below the support, there's a very high probability NY open can continue pushing price down. And that's what we need in the market to break below the wicks here as well. So if you look on the 4-hour time frame, 4-hour candle, it may push below this area to continue down. Looking at the 1 hour, we're rejecting that area, 30-minute here as well. So we're only fixated on the 30-minute time frame at this point. This 30-minute candle is about to close here. 58, one more minute left. Let's just forward this to a close. Okay, perfect. So we close below. Now, this is where NY open has a much higher probability to continue pushing price down, right? And I think this is going to be a very, very good trade if we can wick up and then continue pushing down. Stops are always going to be above this 30-minute candle. Let's take a look on the 15-minute. If we can have smaller stops, yeah, I guess we can have smaller stops above the 15-minute candle over here. So I guess wait for a wick up. See, we're wicking up over here. Very simple, easy trade. We have a bunch of confirmations on our side. We have volume in the market, NY open. We have candle which did a liquidity grab, possibly move back up in the range. We have a candle closing below that same support. We have a candle, the same candle is closing stronger than the previous one and the one before. So I guess there's a very high probability to continue down, and this is where I guess it's going to be safe to say that we can enter a sell over here, secure some profits, and leave the rest running. Move on to the 15-minute. Oh, let's see here. So modify this right here above the 15-minute candle. Probably take profit. And yeah, so we're just going to secure at around 10, 11 pips and leave the rest running. We just need to break below these wicks over here. That's it. That's it. Break below those wicks, and the 15-minute candle has to respect the high of the previous 15-minute candle where we have our stop. We're still in a high volume time over here, 30-minute time frame. 15-minute candle has closed. Taking a look on the 15-minute candle, we're closing bearish below these wicks to the left hand side. 30 minutes still open. Is a stop loss above the current 30-minute candle too aggressive? It's above the 15-minute candle. And yes, it is aggressive because we're playing based off of volume at this point. All right. We're coming down, but we're not breaking that level there. Oh, there we go. We're about 10 pips at this point. This is an extremely risky area because the 1 hour candles rejected this area. So this is where I think it's going to be a good idea to kind of like, secure majority of the position, just like we did in the last example, and let the rest run. Because we can reject this area like crazy, like move right back up or continue down. That's the risk we don't want to take at this point. So moving into Tuesday over here. Very tough. Oh. All right, new 30-minute candle has started. We're closing below the support to the left-hand side. I guess if this candle respects the high of the previous one, we should be pushing down. Now, we're not going to add a position as we break the low over here because we're still in the rejection area at this point, right? And also a better price was where we had the price, but so sad we got stopped out. All right, let's see how we move. Let's take a look on the 15-minute candle. 15-minute is pushing up. 1 hour candle is also rejecting it. Oh, 30-minute candle pushed up. All right, crazy move. Let's see how this candle closes. Oh, wow. Straight pushed up, but we still respected that support there, right? Let's take a look on the 1 hour time frame. Yeah, 1 hour, 30-minute tells us much different story. So we did respect that support. Now, we're not going to execute a trade because we already executed 2 trades at this point. But the knowing idea is that if a candle breaks below the support, then obviously we can continue down. We have clean traffic through the left-hand side, and I think that's that could happen. We're not going to execute, but that's the idea. Looking at the 4-hour time frame, that's also going to be a break of the low on the 4 hour to continue down since we're consolidated for a long time. So yeah, I'm not going to execute. We're just going to go over to the next day after this. Oh, we're breaking the low. Oh, wow, in the first 2 minutes. So this was the move, I guess, we have been waiting for. Awesome. Let's move on to the next one. Oh, damn. Oh, wow. Straight back up. Crazy. We moved down how much? 30 pips, 36, and it moved right back up. 4-hour candle retraced. Oh, wow, yeah. Retraced all the way. So it looks like the trend is still bullish over here. All right. Let's move on to the Asian session. Moving on towards the London session here now. This is London open. 4, 5, 6. Back to 6 a.m. Eastern, right? So let's take a look at the 6. Will you enter that move if you don't have any trade for the day? Yes. Yes, I would if we broke below this low right here. I think maybe. Depends. Depends on what? I'm not sure because we already took a trade. So my mindset is already built on that trade we took. But yeah, maybe with a lower risk, could have with a lower risk. So coming back to the charts at this point, looking at the previous daily candle closed with a doji, that means it opened and closed at the same price, which also means that nothing really meaningful happened at that point, right? The new daily candle has opened. We haven't really moved down. We've just moved up. We're maybe tapped into a rejection area on the daily. We may move down. Who knows? Let's take a look on the 4-hour time frame. Wow, 4 hours still consolidating. I guess it's safe to say we got to wait for this area to break over here on the 4-hour time frame to really tell us where the hell price is going to go. Let's take a look on the 1-hour time frame. 1 hour is just ranging, really ugly range over here on the 1-hour time frame. Yeah, just disaster. Not good at all. Straight disastrous range. This is like almost like a 24 pip range of death. Let's take a look on the 30-minute time frame. Yeah, 30 minutes also ranging at this point. We just have no idea. The only thing we can see here in the 30-minute is probably, yeah, probably a resistance here and probably a support where price is at this point. That's it. That's the only thing we see. And then there's another support right here, which is in a no trade area. I think the only thing we would need is a very, very strong candle to push somewhere. Let's take a look at the news here. We have any news? So we have USD CPI coming up. Interesting. USD CPI. All right. Well, it is kind of waiting for something to happen because we have a pretty big range over here in the 4-hour time frame. Can we again look on the 4-hour wick fill during CPI news, or is it a bad idea? 4-hour wick fill, yeah, you can, but we also broke below the low of the 4-hour candle. So it's very tough. Looking at the 30-minute time frame, I don't know. I think we'll need to probably break below 153,550 to continue down. That's going to make sense. If you do break above 153, 800, 830, I think we'll need a lot of volume to continue up, which is almost like a 20 pip range if you look to the left hand side, if you're really going to be adventurous for price to reach this area. So, yeah, we'll see. Creating a support here too, we need to break below this area because even if we break below 153, this is like a 10 pips away, not enough range. So we really need to break below this area, 153, 540. This candle is about to close. Yeah, very tough. Very, very tough. Oh, we're coming down over here. Just need to break and close below 153, 550. 153, 550. All right, candle closing back up in the range over here. Yeah. Very tough. It's so tough. It's so tough. It's pretty boring. What do you do on these days? Nothing. This is sometimes, we'll look at gold and try to take a trade on gold because, if pound yen is ranging, maybe gold has some volume, but obviously we don't have gold at this point. So yeah, we're just gonna wait over here. We'll see if we can do something with CPI. I highly doubt it, but yeah, we'll see. 30-minute candles coming down. CPI usually doesn't have a big effect on pound yen, but let's try it. Maybe we can strike gold over here. Never say never. All right, we got 5 simulation minutes left. 3 simulation minutes left. 2 simulation minutes left. 1 simulation minute left. All right, so this is where this is also going to be some sort of a like a recap on how I use buy stops and sell stops on high volatile news. So basically, looking at pending orders, I guess we're going to use risk percentage. Let's just go ahead with using 2% risk. We want to use 2%. We're already up 3%, 3.6%. Let's just use 2%. All right, so we're gonna have a buy stop around almost 1 pip away. All right, so buy stop is going to be right here above the 30-minute time frame. Stop loss, yeah, I don't know. I think we're gonna remove the stop loss, and sell stop is probably going to be below this wick. Take profit, stop loss. Okay, so the buy stop is basically placed above the 30-minute candle, and the sell stop is placed below the 30-minute candle. Now, the whole idea of placing buy stops and sell stops above and below the candles is that if we look at the trend, right? If you look at how trend moves, so let me remove these arrows over here. Let me bring up my squares. So if you look at how trend moves, this is how if we're going to have a bullish trend, we know that the candles are going to break above the highs of the previous candles, and we're going to make higher highs and higher lows and all that stuff, right? So even though when you have news events, and if the news candle breaks above the high of the previous candle, there's so much volume that there's a very high probability that we're going to continue pushing up if we break above the high, right? At the same time, if we break below the low, then there's a very high probability price is going to continue pushing bearish. Now, since this is news, um, both orders can get activated. That happened like, a week before last CPI where both orders got activated. So that's something that can happen here as well, which is why we're going to keep our mouse on the X button if they both get activated. We're also going to bring this a little bit slower so that we move according to the proper seconds. All right. Spreads are about to increase. 3, 2, 1. Boom. Oh, buy stop activated. All right, we only got buy stop activated here. Closed the sell stop. We had a little bit of a rejection here previously, so this is why I closed the buy stop, because as we moved up, price could have rejected this area because CPI, and we normally don't expect CPI to have a very, very strong push on pound yen. So that's why I closed it right over here. So buy stop got activated, didn't really, got like maybe 3 pips out of it, whatever. Would have gone to about 10 pips, but we got to be safe. Trading news, you got to be very, very safe. Yeah, I guess this is it for this Wednesday. So we're going to move on towards Thursday here. Let's see what the outcome was. Oh, outcome was pretty good. Really, really good outcome. So if it's good CPI means good US dollar, which means kind of weak yen, and weak yen compared to pound yen means strong pound yen. And that was really, really good CPI. Looking on the 4-hour time frame, we're coming up at this point. Yeah, let's see if we can break above the 4. Oh, wow, we are breaking above this 4-hour wick over here. Can this be a potential entry? It could be a potential entry. So I'm going to take a paper trade over here since we're breaking above the 4-hour wick, because this is the 4-hour wick right here. This is the 4-hour wick, which we're breaking. So this is a trade in my mind. I'm taking stops is somewhere down over here, 153,800. Almost like a 10 pip stop. Nice. Yeah. Weak yen means strong pound yen. Let's see where the candle closes. Oh, nice. We continue to move up over there. Very nice. Okay. Let's move on to the next session here, which is going to be a Thursday. So far, we're up about 4% here. All right, so we're creating some sort of a high over there for price to retest later on. Yeah, if we're going to continue up, we may retest that area. So let's remove all these analyses here and prepare for the next New York session. Okay, 1 hour. This is Asian Open slowly. We're coming into Asian Open. We're going to move into London Open over here. We tried to break the high, but we didn't. London Open, 4, 5, 6. 6 a.m. Eastern. Back again. So the routine is the same. We're going to take a look on the daily time frame. Looking at the daily time frame, we are rejecting that area. The daily candle is coming down. If it's really going to continue moving down, we don't know yet. Where can I download this from? This is Let me put this up right over here. www.soft4fx.com. Soft4fx.com, your simulation provider from MetaTrader for MetaTrader. Okay. Let's take a look on the 4-hour time frame. Oh, 4-hour came back in the range. This could be as a fake out, but yeah, we need some more information over here because we came back in the range on the 4-hour time frame. There's nothing that really tells us what's happening on the 4 hours, so we got to take a look on the smaller time frames here now. So looking at the 1 hour, we basically did come back below 153.800. We basically corrected this whole move. And I think it only made sense to correct this move now in hindsight when we look at it, that CPI would have had no impact on pound yen. So the reason it moved up, there was no reason for it to move up, apart from the US dollar. So that's why I think pound really corrected the price, which it gained and just came back down over here in the range. If we do continue moving down, I guess I'm going to be like a 11 pip range, not enough range. Let's take a look on the 30-minute time frame. We do have the 30-minute candle, which is closing bearish. We have a resistance being formed. We have some sort of a support right here. And if you measure this range, it's like, 15 pips away. Maybe a pretty okay range. 4-hour Rick fill to 153.15. To get more liquidity to go up. Yeah, that could be the case. And also with volume, if we can break below 153.500, we can continue down to 153.320. That could be a case here as well. So looking at the 4-hour, yeah, we could continue back down to the support. Because if we consider this as a big fake out, I think the 4-hour should continue back down to this support over here. Why are you seeing everything so clearly? Analysis, price action, I try to do the same day simulation, but can't see market like you do on some trade. Probably because I've done it for a very, very long time. I mean, just if we look at price right here, it's very clear that the next 30-minute candle, if we break the low, we can continue pushing down to the support, right? And if we break above this high, then we can continue pushing up. That's it. I just want to say thank you for the community. Oh, thank you, man. I really appreciate it. Past the funding challenge. Okay, let's move on right over here. Let's take a look on the 15-minute time frame here. 15-minute is also creating a resistance. This is what I do. This is what you should be doing, right? So if you're looking at a time frame, you're identifying the most recent resistance, and then you're identifying the most recent support. Once you do those things, then all you're looking at to see that, okay, if you've identified a support or a potential candle closing below or closing stronger than the previous one, then where's the next area where price may move into? So if we look here from the downside, the next area is right down over here around, 153.540. But in the same instance, if we break above resistance, then we can see that, okay, the next area where price can move up is all the way up over here. That's it. That's the only thing that we're looking at this point. So yeah, I guess if we can break below this area right here, there's a possibility for price to move down. That's it. Or even if you can wick up and move down, I think that's going to be the same thing. So yeah, let's see. Let's see what happens. See, very simple now. If we're breaking below this area, there's a probability for price to move down. And that's happening in the first minute. Place support at where the big bullish candle start would make sense, or just wrong. Like this one right here. We're looking at this main one right here. News candle. Oh no, we're looking at this main one right here. It's not wrong. It's just like, it's the same thing I say all the time, always go over your charts. Whenever you have a losing trade, go over that trade and really explain to yourself, where would a zone made much more sense, or why would it make much more sense, right? Now, in the past, I would have a zone right over here, 100%, but based on what I've seen by going over my charts, I've seen that, okay, maybe if this was a zone, there was a much stronger zone right over here, down here as well. So then I may want to put my zone right here based on what I've seen in the past. Now as price comes down, we have higher probability that price can continue pushing bearish, and then we have a lower probability that price may push bearish and then move back up. What's right and what's wrong? Nothing's right or wrong, right? It's based on what price is going to do and then how you're going to react to what price is going to do. So probably this is where we're going to enter maybe like a 1% risk because, the range is, yeah, it's like 11 pip range. I don't think it should be even focusing on this trade. It's like a 11 pip range. Yeah, probably no. Because the range is just way too small. It's like a 10, 11 pip range. So if this was in reality, I wouldn't be taking this trade. Maybe I'm second guessing, but yeah, the range is just way too small. It's like a 11 pip range. Probably going to pass out on this, but we'll see. Very, very small range over here. I hesitate to take buys if I see 4-hour bearish candle, even through small time frame with same cells. How to deal? I hesitate to take buys if I see 4-hour bearish candle, even how to deal with that. Just gotta execute. That's it. Just gotta execute. So yeah, we did come down. Was a very, very small range. Good thing passed out in this. I mean, it did work out, but it was a very, very small range, very small range. So you just have to execute. If you execute, you're going to execute to greatness, because then you're going to have two results, either a wrong result or a right result. If it's a wrong result, then you can learn from that and move forward. If it's the right result, then you can say that, okay, I had a winning result. How can I, what's the word? Repeat that again. Um, so yeah, right now we're just gonna kind of wait over here. I guess if we can break below the support, then we can continue down in this bigger range, 20 pip range. If we can break above this area, then we can continue up towards this 20 pip range. All right, the candle has closed bullish. We're kind of like consolidating. Now all we need is a candle to close above this resistance or close below this support. That's it. That's all what we need for price to move. Yeah, see right there. We're slowly breaking above this high. Um, this is a perfect example of taking a counter trend trade where we're breaking above this high to continue up. But since we've missed it, I think now we're just going to wait for the candle to close. Oh, yeah, I think wait for the candle to close would be better. All right, perfect. The candle has closed bullish. Now, this is where you got to make a decision, right? And the decision is, since we rejected the support and we're closing above this support on the 30-minute time frame, looking at the 1 hour, we're also coming up. We broke above the high. We respected this low. This 1 hour candle had a huge rejection. Looking at the 4 hour, 4 hours just consolidating in this instant right over here. Now, what's the probability that the next candle is going to continue pushing up, right? Versus it's going to go down. Now, we have to take a look at a few things over here. This is where, you can say that, okay, the analysis becomes simple is because if we look at the candles, we look at the previous candle, this one, this had a huge rejection from this area, which means price couldn't go down. Very simple, right? No problem at all. Now, when we look at the next candle, it respected the low of the previous candle right here, right here, and we broke above the high right here, and we made a higher high based on the previous candle. Now we look at the candle which closed above this resistance. It also respected the high, the low, and made a new high. So we're making higher highs and higher lows, basically on the 30-minute time frame. So even if you do execute a buy, I think the stop is going to be below this previous candle, like 7-8 pips away, and then you can anticipate price to continue up towards 153, 950, 960, and we also have clean range here to the left hand side. So yeah, I think that's going to be a pretty good idea. Put stops below the previous candle, accept it, go to trade, remove take profit because we're going to take profit at around 10 pips. And yeah, let the rest run. Oh wow, come straight down over here. If we break the high, then I think there's a high probability for price to continue bullish. because if we break the high, respect the low, that's pretty cool. All right, candle's also about to close in about 15 minutes. So we're only looking at the 15-minute candles here. 15-minute, oh wow, 15-minute candle closed with no wick on the top. A bit of a problem over here now. We're in a 2-pip range, missed this close right here, because if I was watching this, would have closed 50% right there. So we're going to close 50% right over here. And yeah, leave the rest running. Didn't really want to do this, but didn't really go as we planned. So the candle's also about to close. I mean, close another 50%. Not looking good here at all. Yeah, see, we closed bearish right here. So just going to close everything at this point. That's it. So manage risk at this point here. You know, open the trade. Ideally, should have closed 50% as candle closed with no wick on the top on the 15-minute time frame, but obviously wasn't really paying attention to that. Price came down to almost entry and drawdown, closed 50%, and closed 50% as, you know, price wasn't really looking to close the way we would expect it to close, and now we close bearish with a huge rejection. So there's a possibility we may consolidate over here in this area, and yeah, that's about it for Thursday trade. Thursday didn't turn out as we expected it to turn out. Let's see if we have any news. We have no news happening, nothing. If you look left, it's just really messy range. Yeah, very, very messy. Very, 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 very messy. So some days, you know, you're gonna get good trades. Like on Monday, we got a really good trade. Wednesday, we got some good trade. Thursday, kind of like messy over here. So, you know, it is what it is. Candles also closed. Look at the 30-minute candle, the way it closed. Just small bullish candle, like nothing happening. Too much mess. Too much mess, not enough sauce. All right. Let's move on to the next, which is going to be the last. It's going to be Friday. Yeah, see, nothing happened. We had some move up. That's it. Later on. All right. Let's move on to Friday here. This is London Open, 4, 5, 6. 6 a.m. Eastern. See, price is consolidating, and it's in a mess. So we're going to do a step-by-step how to make price look appealing to us. We're going to do a full step-by-step over here now. Let's move to the 4-hour. Let's remove all areas on the 4-hour. Daily is whatever. So previous daily candle closed bearish. It closed exactly in line with the bullish candle. So this means we're just consolidating over here. We're like, okay, whatever. Looking at the 4-hour, we are messy. So now this is where we got to identify the most recent resistance on the 4-hour. And the most recent resistance, very simple, is right over here, right? Most recent support is right over here. We're not going to count this as support because this 4-hour candle is still open. So we're going to count the next one, which is right down here. You don't consider weekly candle as halfway through the week? No, not really. We don't have the weekly chart pulled up, so that's why I'm not really looking at the weekly candle at this point. Right, let's take a look on the 1-hour time frame here now. Looking at the 1-hour time frame, since this 1-hour candle closed bullish, so we have a support formed right here on the 1-hour time frame. Right now we got to look for resistance. As we move up, we have a resistance right here. If we create a resistance right here, we have another resistance, which is 5 pips away, right over here. So probably this is going to be a better resistance since now the goal of creating a resistance is to tell yourself that what's going to happen if we break this area. If we break this area, we can go above here, which is like 5-6 pips away. Realistically, are we going to trade this break? Probably not, because the range is too small. So since this range is too small, we're going to bring the resistance right up over here. Because now if we break above this resistance, the next kind of like a rejection zone is around like, 13 pips away. So that could be like an idea that if we do break above with volume, we can continue much further. So that's going to be the resistance right there at that point. Obviously, if we measure this range, it's like a 20 pip range here for price to move down, right here, provided there's volume for price to break. Let's take a look on, let's clone these over to the 30-minute time frame. All right, so 30-minute, we have a support down here. We're possibly creating a resistance on the 30-minute right about here. Because look, price came down, broke this 30-minute support, made a low, came up, created like a minor resistance right here for price to possibly continue pushing down, right? If that happens, it happens, but if it doesn't happen, then, you know, what can you do? So I guess we'll have to wait for price to break above this resistance 154, which is also a very strong level, you know, psychological number for price to potentially continue pushing till 154, 100, 154, 200, whatever that price is. So yeah, very tough. It's tough because there's a lot of waiting. That's why it's tough. You know, that's it. Because there's only a lot of waiting over here. That's the only reason it's tough. Because as traders, we don't want to wait. So yeah, 1 hour needs to break below this area to continue down, or we need to break above, I guess, 154 to continue up. Other than that, we're just consolidating over here. That's it. Because it's also Friday too. And I mean, the goal is to kind of like wait for a familiar candle pattern. That's the goal. Just wait for something familiar that we've seen before, something we can execute on, and probably have a nice day. That's the entire goal over here. So you see, we're just consolidating here. Let's take a look on the 15-minute. Yeah, we're just rejecting. So having no position is also a very, very good position. Having no position, you can say, oh, I had no position today. Oh, nice position, man. No position, beautiful position. Excellent. All right, so we're coming up towards this resistance here. If you do break above, I think that's going to be a very good idea for price to continue bullish. Although we are creating a high and a retracement to continue up, so yeah, let's see. All right, 15-minute is also, look at this. This is where volume comes into play. 15-minute is creating a minor resistance right here. And I guess if we do break above this area, there's a possibility for price to continue bullish right over here. So we're going to keep this in mind. 30-minute looks like there's a resistance right here, but we're just counting on volume over here at this point. So yeah, let's see. Let's see if we do break above or not. Very crucial area here. Very, very, very crucial. Ooh, this is NY Open now. NY Open has started and yeah, nothing. We have some retail sales data. I don't think retail sales data is going to affect pound yen as much as CPI did. But yeah, let's see. All right. Oh, oh no. We're about to push up through that area. Close to 153, 990, 980. 1 hour candle still consolidating. 30-minute candle. Very tough and very risky price action. If we break above this area in 15-minute, I don't want to enter a trade. I just want to see how this 15-minute candle is going to close. So let's take a look at that. Oh, wow, look at that. 15-minute candle closed above that resistance. Looking at the 30-minute, we're also breaking above this area. So I guess this could be an idea for price to continue pushing up. You know what I'm saying? This could be an idea right here. 1 hour candle is also breaking above the highs. 15-minute candle broke above this area. I guess this could be, if we're going to take this one last trade, I think this could be a very good idea to possibly execute on for price to continue up. So we're going to go with a 0.5% risk just to, for the sake of taking a trade here. It's also a Friday, so keeping risk small. Stop is going to be well within this range over here, because if we're expecting price to move up, we're not expecting it to continue back down within this range, and we're just expecting it to continue bullish. All right, 30-minute candle's pushing up over here very nicely. Very nicely done, 30-minute candle. Keep pushing. 5 pips, 4 pips. I guess we'll see. Oh, we're coming down towards our entry point as this candle is coming to a close. So probably going to close partials, more than partials, because we really got to manage risk. Yeah, we really got to manage risk, put stops at break even, because the last thing we want is a losing trade on a Friday. Oh, we got stopped out, no big deal. Yeah, I guess this is it. 4-hour candle. So basically, this overview for GJ considered as trash week. Yes, considered trash week. Price action was not solid. We didn't have any good moves. The only good move we had was on a Monday. Apart from the fact that looking on the 4-hour. All right, let's looking on the 4-hour. There's a possibility if we break above the 4-hour high, we could continue up over here. I guess we can take a look at that. Yeah, let's do that. Let's take one last trade if it happens. If the 4-hour candle can break above its own high, we can move up since we have clean candles to the left hand side. Let's just give price action that moment over there. Let's place a buy stop here better. Place a buy stop around, yeah, right here. Stop is going to be below the 4-hour candle. TP is going to be all the way up towards 154.300. Yeah, let's do that. You know, I mean, it makes sense, right? If the 4-hour candle breaks its own high, there's a clean candle to the left hand side, and we should tap into that area. So 4% so far this week, which is pretty good. Very, 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 very good. I would say there should be no problem with that at all. How big is this? 18, 19 pips. Oh, we're breaking above the high. Oh, buy stop executed. We're moving up in the world. Let's see how the next 15-minute candle closes. 30-minute candle. Oh, wow, we did move all the way up over here. 15 pips. Nice, nice. Not bad, not bad. 30-minute candles retracing. 30-minute candles also about to close over here. Moving back up. Pretty nice. Clean candles to the left-hand side. Let's see how this closes. Do we really push up or we don't? That is what it is. So close this right here, clean candle. We did try trash week, but the most important thing was to wait for something that makes sense. Like this buy we took right here, we waited for price to break above. It made sense on the 15-minute right here, made sense on the 30-minute, made sense on the 1-hour, but there were a lot of wicks over here. It is what it is. Some weeks you're gonna get where price is just gonna be trash, and you'll doubt yourself, you'll doubt your analysis, you'll doubt everything, because you're not waiting for candles to print something you've seen before in the perfect what's the thing, in like a perfect scenario, right? But this was actually recorded. The audio was also recorded this time. It's going to be in the drive in about 3-4 hours. Thank you everyone for taking the time out of your night or your day to come tune in. So yeah, so we're gonna see you guys on Monday. Take care, everybody. Wait till candle print something. Yeah, exactly. Something we've seen before. Awesome. Have a good weekend.